Rohr here with the aftermarket analysis and outlook for Friday, October 11th, 2013 for the foreign exchange markets. It's a separate video this time, of course, because actually this is our weekend analysis, and as usual we have waited until Sunday evening in order to get a peek at how things are acting into the top of the week that will begin tomorrow morning on Monday, October 14th. In fact, this is that trading from off in the Far East. And this is going to be fairly concise because it is pretty impressive the way neither the govies, as we covered in the equities and fixed income video, nor the foreign exchange reacted very strongly to the very radical recovery in the U.S. equities that led the rally elsewhere on the back of the consideration that possibly the U.S. budget and debt ceiling confrontation was going to be resolved in Washington, D.C. due to the somewhat friendlier noises being made on Friday. But in the event, over the weekend, it turned out that the Republicans felt that President Obama was pulling a bit of a bait and switch, saying he was willing to negotiate, when in fact he didn't really have much to offer them on any of their spending cut requests now that they've backed off from the more radical repeal Obamacare thrust from a couple weeks ago, which was indeed pretty benighted, but they have reduced their request to what should have been the case in the first place, normal budgetary type concerns. And we see where the dollar index did rally off the recovery in equities, and the dollar index is moving a bit more so with the equities these days, because the weakness of the equities, as we've noted previous, is not creating a haven bid in the US dollar, because while that does tend to be the case when the problems are elsewhere, when the US is such a clear driver of problems for the equity markets, the dollar tends to suffer very often right along with the equities. So dollar index did get down below 80, but couldn't even get to the tolerance of that area at 79.5. Held up just above that. Recovered last week, especially into Wednesday, already put on a nice recovery, but really didn't follow through with the equities at all on Thursday into Friday, when it was actually off a bit. And this is the key: the other currencies were not weakening against the dollar, and that left, even in spite of the modest upturn in the daily MACD, the overall trend still appearing quite a bit soft in the dollar and firm in the other currencies, as we see right away with the euro versus the dollar, which has only backed off to test the 135 to 134.5 area and is getting the bid back here on Monday morning in spite of the weakness of daily MACD. But of course, weekly MACDs remain up on most currencies against the greenback at the present time. And we can shift over to sterling, which did, in fact, interestingly enough, break down through its aggressive upward channel support at 160, but here as well, 159.5 as a buffer held up on closing. The market did trade below it, but you never closed below 159.5. It even had a bit of a further buffer after this new high, in the form of a Fibonacci support right at 159 even. And of course here as well, while it is below its 18-day average, weekly MACD, because of its previous upside leadership role, remains quite firm, and daily MACD being down for a while won't mean a whole lot if it starts closing much back above 160. That would make it a candidate at a minimum to retest the topping action in the mid 161 area from the new high and lower close on the downside closing price reversal 2 weeks ago. If it should slip further, also there is a lot of support, especially again with the modest new high into the mid 162s. 157.5 to 157 is reinforced now by the upward evolution of this Fibonacci retracement of the last swing from this last major sell-off low going back into July, which you can see even more clearly on this chart was a violation of the 150 area support. But you also have your 13-week average coming up into 157.5 to 157. So there's just a heck of a lot of lower support, even if it doesn't push out above 160 again. Going over to Asia, the Australian dollar as well did not weaken much at all, held around its 18-day average on the pullback on Thursday on that explosive action in the S&P 500. Has been in a most mild flatline sort of attempt to downturn on the MACD. Feels more like it wants to challenge or surpass 95 even again. That being the case, there is an old low up around 96, 95.81, which we kind of keyed on the way down, but the market's shown an ability to churn around that area rather than push through it straight away, and the next significant resistance above the 95 area is the 97 area Fibonacci retracement, and the yen is also showing a bit more strength against the dollar after it took the more definitive downside correction on the strength of U.S. equities when everyone thought the initial weakness in equities, the yen had kind of a haven bid but could never quite get convincingly below the support in the 97 area. That left it open to rallying all the way back to this 98.30 to 80 range that it has been churning into and out of for a while now. It becomes only a bit more important because the downward channel is in the mid 98s into the early to mid part of this week, and the daily MACD on this one is turning back up. So if the dollar is going to weaken, we would suspect that maybe the dollar yen has run its course on the upside, and weakening of the equities once again might well bring some pressure back here as well. Now, the other interesting shift is the degree to which the Asian currencies had been strengthening against Europe. Notice the weakness of the euro yen dropping back below this key 132.5 area. It stalled against so long that finally pushed back above about a month ago, but it could never really get convincingly below the 131 area. And that was important because that's the natural buffer on both lower congestion and the 13-week average and the trend line support in the last week. So this was a pretty significant holding action. Question is, can it really strengthen enough above 132.5 to reinforce both daily and weekly? This is the weekly over here, which has been down for a while. Daily only down mostly on this last sell-off. Daily and weekly MACDs turning back up in favor of the euro. And we also have, of course, the euro versus the Aussie. And the Aussie having been so strong of late, the euro is not recovering quite so well, but has also not had much success failing below this mid 143 area once again. It did dip below it on attempted down breaks on slippage going back about a month ago. Finally did break down on the close of a given week 2 weeks ago, and that level, even though the market didn't quite trade there during the week, was in the mid 145s. And of course the recent highs are in the mid 145s. So we're really playing off these mid 145 highs against the 143.5 to 143 area support. Whichever way it comes out of that, it's likely to show some follow through. But in the meantime, the daily MACD is kind of flat. And even though the weekly is down, there hasn't been much significant progress. You need to get confirmation below 143 area on a close to really make that convincing. And last but not least, there is the euro sterling, where of course the sterling was the hands down upside leader into the mid-September period. That was that big strength above 160 on the pound that went up to 162.5. But after the better part of a month of probing the low end of its gradual downward channel, the euro was able to hold against the 63.5 area, put in an upside reversal from this close here at 83.77, and that also took it back above the moving averages for the first time in a while that were over here in about the 84 area. However, it's up to the weekly averages now in the low 85 area and would have to recover back above this failed Fibonacci 25% retracement at about 85.5, which also is quite a congestion area as well, that if it were to get above it, then there really isn't much above it till 86.5, and it'd be reasonable in this kind of gradual channel early in a move for it to get back up into the 87 to 87.5 area to fully fill out in the channel. So a big decision for a couple points either way out of 85.5 area. If it's not good from there, it could reasonably revisit the lower end of the channel after this nice bounce over the last couple of weeks. For right now, the daily MACD is favoring the bulls, and the up break was from right around this 84.5 area Fibonacci level. And of course, we're also seeing the daily averages moving up into the 84.5 area. So for right now, we're playing off 84.5 as support against 85.5 as some very key resistance either way. Our instincts are that the European currencies, having failed against, weakened against Asia for a while, might well be ready to continue to recover, and if the continent is going to be the leader, it also speaks well of the euro's ability to improve further, but only above 85.5 does it really escape against sterling. And back to the dollar index, looks, a bit boring over the past few weeks as it's churned sideways, but either back above the congestion at 81 or below 79.5. It's probably ready to move at least another full point either way. And we'll be keeping an eye on this one as well for the potential for this bounce to near the previous bounce high at 80.65, fell a bit short of it on this rally, to evolve into a short-term, very shallow head and shoulders bottom. That's an inverse head and shoulders, of course, in which case we should think you wouldn't have to revisit 79.5. If you start holding up right around 80, you might well then see a push, an attempt to push above the mid 80 area. If you start eroding too far below 80, be a sign this was just a correction and there is no bottom in formation, and it might be going lower. We'll be back with more after the close on Monday. Hope you enjoyed the discussion, and look forward to updating you with them. Bye for now.